Good morning, Mom. Good morning, classmates. We are the Group 8 and was assigned to report the topic about completing the cycle for merchandising business. Number 1. Recognize the need for a physical count and analyze the effects of omitting the procedure. In inventory, it is need a physical count. If procedure was omitted, then the inventory would not reliable. Number 2. Determine the entries for merchandise inventory using either the adjusting entry method or the closing entry method. Yes, we must aware for entries as merchandising has its own entry compared to closing entry method. As closing entry method includes closing revenues to income summary, closing expenses to income summary, closing income summary to retained earnings, and closing dividends to retained earnings. While merchandising entries are used with the term of sales, purchases, sales return and allowances, sales discount, purchases return allowances, purchase discount, freight in, freight out, and many more. Number 3. Prepare the adjusting entries for a merchandising entity. In order to make the income statement report the proper revenue or expenses, or in balance sheet the proper asset or liability. Number 4. Recognize the need for a worksheet and summarize how the new accounts related to merchandising transactions are handled in the worksheet. Yes, the company must aware the differences as merchandising is different from services. Number 5. Prepare accurately and in good form a 10-column worksheet. It is objective in order to distinguish between income statement of services and merchandising entities. Number 6. Understand and appreciate the usefulness of financial statement. It is very important in order to acquire a basis for decision making. Number 7. Develop skills in the preparation of financial statement. Yes, because financial statements are important as they contain significant info about company's financial statement. Number 8. Compare income statement prepared under the nature of expense and function of expense methods. It is to maximize profitability, you need to know where the money is coming from and how it is spent. Without this information, it is difficult to make effective decision for your business. Number 9. Explain why temporary accounts are closed each period. It is needed to close some accounts for each period to prevent their balances from being mixed with those for the next period. Number 10. Recognize the need for a post-closing trial balance and reversing entries in the particular instances. In order to prove the equality of total debit and credit that carries forward into the next period. Number 11. Prepare closing entries, post-closing trial balance, and reversing entries. Explanation of this objective is same on or sort of in the objective number 10. Number 10. Number 12. Explain how the worksheet under a perpetual inventory system differs from the prepared under a periodic inventory system. It is important to recognize and know the uses or differences of periodic inventory system and perpetual system. As you can see on the screen appeared, the next topic is about need for a physical count. In this instance, company use physical count strategy in order to know how much they have on hand at a specific point in time. Company undergo with physical count to ensure that the company's inventory management system is accurate and as a check to make sure goods are not being lost or stolen. Physical count of a company's entire inventory is generally taken prior to the issuance of a company in balance sheet. Physical counts applied by counting all merchandise owned by an entity, multiplying quantity over unit or per unit. Cost of various items are added to total cost inventory. The reliable physical count is needed or applied in this instance to check the error and correct the ending inventory to know how much is available items company have.
Merchandise inventory at the end of the period. At the end of the period, entries are made to reflect in the inventory account the ending balance. The objectives of these entries are as follows. 1. To remove the beginning balance from the merchandise inventory account and to transfer it to the income summary. 2. To enter the ending balance in the merchandise inventory account and to establish it in the income summary. The attainment of the objective is illustrated using the figures from GD Toya. In this example, merchandise inventory was 528,000 at the beginning of the year and 483,000 at the end of the year. Effect A, remove 528,000 from the merchandise inventory account and transfer it to the income summary. In income summary, the 528,000 is in effect added to net cost of purchase because, like expenses, the balance of the purchase account is debited to income summary by closing entry. Effect B, establish the ending balance of merchandise inventory of 483,000 and entered it as a credit in the income summary account. The credit entry in the income summary has the effect of deducting the ending inventory from goods available for sale because both purchases and beginning inventory are entered to the debit side. To summarize, beginning merchandise inventory and purchases are debits to income summary, while ending merchandise inventory is a credit to income summary. Thus, the objective stated if effects A and B concurred, the question then arises as how to achieve these effects. Two acceptable methods are available, the adjusting entry method and the closing entry method. Each method produces exactly the same result.